welcome to Money Control. Well, as part of our Diwali special conversation series, I have yet another astute investor to talk to us today, reflect on last year and crystal ball gaze into the next year. Shankar Sharma. Shankar, thank you so much for your time this afternoon.
Thank you very much for having me, Mahalakshmi.
And where are you right now? You're not in India, you're in Turkey?
No, I'm going to Turkey next week, but I'm in Dubai right now.
Awesome, awesome. Thank you so much for joining us.
Likewise, and always a pleasure to speak with you, and a very happy Diwali in advance to you and all the viewers of Money Control.
Absolutely. Thank you so much and wish you the very same. So first of all, Shankar, just reflect on the last year, because at this point in time, if you look at it statistically, just look at the math of the last year. Last year to this Diwali, nothing. The market has done nothing in terms of Nifty. But it looks like a lot happened. You know, you saw sub 17,000. There was so much fear on the street in March. And then stocks were going up like there is no tomorrow. In the last, few months, the mid-cap rally has been so sharp. So we've somehow seen, a lot of fear and perhaps some amount of greed in the last few months. How do you stack all this up? In terms of experience, was there anything new for you at all? So just take us through how you went through this year.
So it's interesting you mentioned the fact that last 1 year on the headline indices, the major ones, it's flat, and which is actually a fact. And in fact, if you go back even 2 years, I don't think the change is anything very remarkable.
Correct.
Both on Nifty as well as the Nifty. And that is primarily due to the fact that the banks and Reliance in particular, which probably are in aggregate maybe 55% of the index, have done not much or nothing much of note in the last couple of years. And what was doing well were really the Adani Group companies, which had driven the Nifty up in the prior period. And obviously in the last, 1 year or so, that group has also been flattish to a bit down perhaps. So net, the market on the broad basis, if you look at the indexes, they have done nothing. But the point is, today I can see my net worth from last year to this year, it is substantially up. I mean, so the point is that, and I'm sure I am along with millions of other investors who have become much wealthier in the last 12 months, despite the main market indexes not having done anything at all. And that's where is the interesting disconnect between large cap investors and small to mid cap investors. And for my personal investing, I do not look at large caps. And frankly, I'll be honest with you, I don't even know where the bank Nifty is trading at right now, if you ask me. I have no interest. I have not owned banks for a long time. I have no interest in owning them, and I have no interest therefore in the bank Nifty. And I don't trade FNO anyway. But I know prices of 200, 250 small cap, mid cap stocks, because that's where the action has been. And that action has been mind-boggling, to say the least. It has been, like I said, tremendously good for my net worth, as it has been for many other people's net worth. So, I'm not complaining, Mahalakshmi. I'm feeling very happy this Diwali, to tell you the truth.
No, absolutely, because this mid-cap rally, even if you look at it from the domestic mutual funds perspective, because a lot of money has come into mid-caps and small caps and the traction has been there, at least there is a feel good both amongst investors who have put in money in these funds as well as people who have participated in this rally. No question about that. So there is a section of the market, and notably a lot of fund managers think that because the last 2 years large caps have not done well, those valuations seem to be looking more attractive than mid caps and small caps. I know you don't invest in large caps, you just said it. Do you see value there at all?
I'll be honest with you, Mahalakshmi, I remember a meeting, and there was a round table in Bombay organized by a newspaper where there was a similar debate a few years ago, more like 2016-17. And my view at that point was that, again, I saw small caps as doing much better than large caps, and the CIO of a large mutual fund, who's a very old friend of mine, Became very violent in that meeting. I mean, when I said this, short of catching hold of my collar and saying, no, small caps cannot do well. Large caps are the only way to make money in India. He did something else. And I was frankly taken aback in the beginning. But then I figured out that, look, for an asset manager, you don't make much money on the fees when you manage small cap funds, because by size you're limited. I mean, to get a 15,000 crore AUM in a small cap is impossible to get, and more than that, if you get it, impossible to manage because of liquidity and all.
Correct.
So you're predisposed to being bullish on large caps because that's where your bread is buttered. So a lot of the noises you hear from asset managers, fund managers, the large caps will now do well, is a hope trade. It's a hope trade coming out of their own incomes, their fund management companies' incomes. It has nothing to do with the reality of what might happen. I just want to make this point very clearly to viewers. There are a lot of things which are said are driven by personal biases and personal interest of the people talking about it. I don't have any axe to grind either way for large caps or small caps. It is my belief small caps in India are the place to be in. And I say this because I am fundamentally of the view that large caps have hit a certain size ceiling, at least for a while to come. If you look at profits of an HDFC bank or a Kotak bank relative to, or banking in aggregate relative to GDP, you are at numbers which, I mean, are astounding for still what is relatively a poor country like India. And therefore, I believe that small caps have still got a lot of headroom to grow versus large caps, which are probably hitting the ceiling of their immediate near-term growth outlook. And that's where the whole discussion lies, that I think growth numbers will continue to surprise on the upside for small caps, while not so much for large caps.
Okay, I take your point on that. But statistically, if you see, last 20 years, we did the math and saw that, if you just look at 2003 to 2023, largely mid-cap indices, I'm not talking about specific stocks, the mid-cap index returns versus the Nifty is pretty much the same. It might be 1%, which you can still say that, the compounding of even 1% over long periods can be substantial. I'll agree to that. But largely, returns have not been very different. And what works against them is the fact that, there are periods of volatility or sharp down move, which sort of takes that away from, that compounding effect away from mid caps. And I think with retail investors, that's, for astute investors like you, that makes, you know how to navigate it. Tell us, how does a retail investor look at it and navigate it and emerge out of this profitably?
No, you're 100% right. On the long-term basis, the difference between mids and the smalls is not sharply different. And in small and mids, you get a lot more volatility.
Right.
I get that point. That is not in debate, because that is data. It's not a matter of my personal opinion. That's what the data says. But that's the point. History cannot always be a perfect predictor of what the future holds for us. Okay? Particularly in a country which is still in a fairly strong growth phase like India. In both stable state countries, you can make a reasonable prediction of the future based on history. In India, I'm not sure that is a very smart way to do this. The reason being, and I've said this earlier on your shows as well as on your sister channel shows and other places, India today is a $3.5 trillion economy. It is adding $200 billion or thereabouts in GDP value every year, which was the entire GDP of the country when I entered the business in 1989. Now, what that does is a very important thing, and that's where the whole small cap story rests, long and short of it. $3.5 trillion divided by 5 regional parts of India, average $800 billion or so per region. It's not obviously equal. Different regions have different GDPs or GSDPs, but I'm just simplifying this for the purposes of this discussion. $900 billion per region. That is 4 times the size of the country I started my business in 89. 4 times the size of India itself. Think about it. Right? Now, Now, the point is this: companies which are only focused on servicing their own individual neck of woods, which is North India, Central India, East India, South India, Western India, they are now getting a market that's 4 times the size of the country that I came into as an entrepreneur. That means, and this is, by the way, the same size as Saudi Arabia, which is $850 billion, same size as Turkey, $900 billion. Each part of it equal to large countries, much larger than individual European countries. Therefore, small caps don't have to become pan-India plays for them to deliver very good top line and therefore bottom line numbers. They can operate in Calcutta, sell to Orissa, they can operate in Kerala and sell around southern India, and so on and so forth, and yet have markets large enough to drive 500 crores, 800 crores, 1,000 crore top lines, 100 crore bottom lines. 100 crore bottom line will trade at 3,000 crore market cap. If I've been lucky to buy some of those companies when they were 500 crores, I'm sitting on a 5x, 6x profit. That's the reason why I like small caps now. In aggregate, $3.5 trillion is a large economy. But when you break it up to individual parts, these sizes give you enough growth options as a small company in just one part of the country. And that is where this whole last 20 years being extrapolated to the next 20 years may not actually hold true. That's the reason why I say the past may not predict the future perfectly in the case of India and where we stand right now.
And so are you talking about regional players because the regional markets are larger, or are you talking about, regional players actually going for pan-India growth?
I'm saying regional players staying with regional growth. That's it. That's the play I am focused on. That's the play that has been excellent for me in the last 2 years' time. I'm not interested in pan-India companies because pan-India companies have to work with pan-India issues. And regional players are very strong in their own region. Like, for example, talking to the jewelry company in West Bengal. I mean, they are opening shops in the smallest parts of West Bengal, and that region, which Titan will not find it economical to open up in. Because at their overhead, their cost, it's not viable. But for a small, low-cost regional player, it is very profitable, and the company makes a decent margin selling just to the so-called underprivileged parts of India. So that's the point, making the case that the long-term returns of the past, that there's not much difference between small and large cap returns, may not hold true in the future. Not hold true.
Sure. So that is the growth aspect, Shankar. Now, again, statistics that got revealed, and we also reported on it in Moneycontrol, the fact that there are about 420 odd active mutual funds in the country, but the universe of stocks that they invest is only about 380. So, of course, from the fund's perspective, there are the rest of the universe is less liquid, so they can't hold large positions. That's not a constraint that individual investors have. But in terms of governance, how do you sort of evaluate, and how does an average investor navigate this? Are there any thumb rules that you would suggest for investors to follow?
We have got a good example in case of a recent company which you and I have discussed. We can, as minority investors, we do not know beyond what is reported publicly. What the company does behind the scenes is impossible. Even auditors get fooled. Forget about us holding 1%, 2%, or even independent directors get fooled. So that is a risk you have to accept. Rather, why even small caps? Even in large cap companies worldwide, there have been enough blow-ups. I mean, Enron and WorldCom were not tiny companies. They were held by marquee investors. They had auditors which were Arthur Andersen and stuff like that. So we accept it as as an occupational hazard. That's an occupational hazard as equity investors. And let's not, get too fussed about it. The fact of the matter is that we assume that this will not happen to 100% of our portfolios. We might have bad eggs, maybe 1 or 2 or 5% of the portfolio. If we lose 50% on that, we are still okay, because on the ones we will make money on will more than make up for the bad eggs. I mean, that is the only way you can live with the bad eggs in your portfolio. And you will have a few. And the smaller cap the company, the smaller the cap of the company, the more the risk, because they're untested. We don't have enough data governance. And a lot of managements also as far as I can see, have to go through a cycle of misgovernance to improve back into governance. Okay. And they believe that they are smarter than the market, and then they can fool the market, they can fool regulators, they can fool agencies. Then they realize कि नहीं boss, ऐसा नहीं होता है. But एक बार problem, then they have a second coming. Okay. So I mean, Mahalakshmi, we will all get taken for a ride. Accept this. I accept this. I have limited view of. I own probably 40, 50, 45 stocks, maybe 50 stocks in India. Am I 100% sure of what they are doing behind the books? No way. Okay. Am I sure that one or two will come up with very shocking things? 100% sure of that. We just hope remain at one or two and not 50% of the portfolio.
Right. So, are there any questions that you ask again, Shankar? Anything that take us through your checklist?
The checklists are very simple. We look at obviously the quality of the board, that is of reasonable value. But more than that, I'm not saying big four or big six are some holy grail of good auditing. They have made enough. In Satyam, we had Pricewaterhouse, Enron and WorldCom had, Arthur Andersen at that point. In Byju's, we have seen Deloitte, do things which I would imagine are not possible. The fact of the matter is that there's no guarantee that even a good brand name auditor will be able to protect minority shareholder interests. But tax payments are critical, very critical. Company paying tax, full tax is a decent bet. Company paying dividend, even better. These two hygiene checks, if you broadly keep in mind, I'm not saying it's 100% foolproof, but back of the envelope, tax payments and dividend payments would ensure that the company is generating cash and not just accounting profits. And that is a good enough reason to buy a small position in a company from a retail investor standpoint. That's back of the envelope. That is a hack, I can tell you.
Sure. And any segments that you find particularly interesting in this space? Take us through. Even if you don't want to name, take us through some of the stocks that you're really bullish on.
No, so I am, like I said, there was a period in the last 2 or 3 months' time when I was very concerned about market levels and, more importantly, fairly uninitiated people making a lot of money.
Yeah.
Okay. Those things typically don't end well. We have seen that. I'm not saying they are ending right now, but at least for experienced investors like us, that they begin to sound an amber kind of, show an amber kind of light. And the markets did then undergo a very, very sharp and a brutal correction. Okay. Things look like being stable. Numbers of many companies that are coming out are still very strong. Even the fact is that some of them have corrected, yet numbers are very strong, which sets up the market for a good move hereafter. I am not a believer in going sectoral in small caps because people say defense companies or railway companies. I'm not a fan of that approach at all. At all. I would caution against that. Because these are in small caps, the sectors are yet to be fully formed. They're not like large cap sectors, which are very discreet and easy to identify. You get boxed into what is the current flavor of let's say the season, like railways has been or defense has been. I think you should be very cautious about. You might own one or two, but don't put like all and most of your portfolios into sectoral plays in small caps. The beauty of small caps, Mahalakshmi, is that it allows you to buy a very wide range of companies.
Right.
Very wide range of companies. I just bought a company which is into marketing technology. We call it MarTech. Okay.
Right.
They sell garments, but they also manage through their algorithms the marketing tech for a large online retailer. Now that's an interesting space. Now, what industry do I fit it into? I do put it into garments.
Right.
Put it in tech. God knows. So I'm not getting boxed into all this. I like to buy companies, good outlook, decent valuations, and then we leave the rest to God.
Right. So tell me, what are the narratives in the market, Shankar, that you won't buy today? There are lots of narratives. For example, you talked about, railway story. There is also the defense story. There is the power story. So many of these, even if you look at companies within those baskets, each one will have a very different model. But as narratives, what do you bust?
I definitely like to stay clear of public sector companies. I know they have been in very, very strong flavor, and I like to stay clear of companies we do business with the public sector or the government. By and large, that has not worked out well. And now, hey, maybe I'm too old
Because
for
of the
this.
receivables problem, because of the payments
Problem,
issues.
payment problems, kickback problems. I mean, you know the whole gamut of things that you need to do as a company in order to win business from the government. And irrespective of any government, all these things happen. They happen. They happen today. They will happen. They happened yesterday. They will happen tomorrow.
But that is also the segment that has got truly re-rated in the last 2 years, right? Because government was the biggest, spender in the industrial space, and a lot of small companies' balance sheets actually got repaired only because of the strength of government orders.
I agree. But that's the point, right? The beauty of this market in India right now is that while for mutual funds there is a limitation on number of stocks you can own.
Yeah.
For high net worth or substantial investors like me, forget about lower size investors. You are spoiled for choice, Mahalakshmi. I mean, you have literally hundreds of companies to choose from. So we don't have the mutual fund problem.
Right.
So there, why do I need to necessarily buy what is in flavor and where I'm not comfortable with?
Right.
I can buy things I'm comfortable with. Obviously we take risk. It's not that there is nothing. I mean, there's no risk in the stuff I buy. I mean, I like to take risk in my investing. That's well and fine. But not a particular kind of risk like companies dealing with the government of India. Okay. I have many other companies that I can do business with. I mean, I'm not I mean, invest in and make a fairly good return. But my view is that anything to do with the government, it depends on government policy, number one. Number two, it depends on budgetary allocations. And you don't know what the next budget might, even if railways, the finance minister says the growth is not so much in the budget, these stocks can crash 30-40%.
Right.
Same with defense.
Right.
So they are very sensitive to government policy. That's the point, to budgetary allocations. And that makes it a very high risk play from my perspective.
Sure. And so fine. So you said PSUs is a no-go. Anything else? Banks, you said you have no exposure to banks at all. So again, I mean, is this narrative as the economy grows, if we were to look at 6-7% growth on an ongoing basis, how can you ignore banks at all?
Please don't say this, Mahalakshmi. I remember in 2007, the same story was talked about infra. That if India has to grow 6-7%, infra has to grow.
Right.
Well, India has grown 7%, but trust me, those infra companies don't exist anymore, or most of them.
Right.
So India will keep growing irrespective of what happens with the banking sector or the infra sector. Some newer players come up. Like I said, they are already, the good ones are of a size where in order to grow, they will necessarily need to take more risk. And HDFC Bank's NPA numbers that came out a while ago, we know what kind of reaction that elicited. So, the pool of lendable retail assets, nobody wants to lend to the corporates, none of the private sector banks. They're not interested. Everybody is chasing the retail loan segment. In that, the bankable retail loan is probably done and dusted. So you're going to the unbankable or moderately bankable, which is the unsecured part, which has become like a larger and larger pie of incremental bank lending. That's what makes me extremely uncomfortable. Extremely uncomfortable. These blow-ups happen in banking worldwide. We will be no exception. Mark my words, in 2 or 3 years' time, these same loans will come back to haunt these banks. I will be then around, hopefully, to pick up these banks when they're trading closer to book value rather than trading at 2.5 or 3 times book value.
So, but the fact that, for example, a Bajaj Finance, has such a remarkable track record of, managing an unsecured book for such a long time, does it not give you the confidence that, yes, this business can be done? Or is it sheerly because of the base that you think that now it can't be done?
I mean, I'll be honest with you. I think Bajaj Group is the best, absolutely the best managed group in the country. I mean, I've said this for decades. Okay, so This is no comment on Rajiv Bajaj or Sanjeev Bajaj as entrepreneurs or the late Rahul Bajaj. I mean, I've considered them to be fantastic business people, very capital efficient, focused on bottom line, focused on cash flow, focused on risk. I'm a fan. Let's put it this way. That said, when you reach a certain size, you necessarily will go off on the risk spectrum. Okay. Earlier, Bajaj Finance could grow because the pool of lendable assets was there. Maybe now they are getting close to what is now the ceiling of that. We'll see. I mean, let's say I'm a fan, and I hope they defy my skepticism, not just on Bajaj Finance, but I'm talking retail lending as a business itself. But I want to be taking that risk. If other people want to do that, they're welcome to do that. That's absolutely fine.
Fair enough. Okay, talking of the of global macros, the last time we spoke, I think, was in March, and you were telling me that largely the worst of the interest rate cycle is behind us, because statistically we will be looking at numbers based on last year's high base numbers, and therefore the inflation trajectory will be down, and therefore the interest rate cycle will also reverse. Now there are again fresh concerns. There is this Israel Hamas conflict that has come up. Once again we are the market is somewhat nervous about what is to come. Labor market continues to be strong. Does this worry you, or do you maintain your stance?
Well, I mean, again, somebody told me, I don't know whether the statistic is correct or not, the world is right now undergoing 13 wars, big or small, which is quite a number. But at least we know of the two big wars. And I can't remember the last time when we had two major conflicts going on simultaneously. All of that is, and they are in oil and gas producing areas, be it the Ukraine or the Middle East. So unfortunately, they are in that region where that drives inflation to a large extent in this world, which is energy prices. So obviously in March, we never knew that this was going to happen in Gaza. These problems have kept the Fed on tenterhooks. And I mean, not with you, but with Prashant, I remember like a couple of years back when the rate cycle had not started tightening, I'd said that the Fed has been extreme. I think that was 2021 March or April. When I said that they will have to tighten because they have been too loose, and when they tighten, they will not stop at moderate tightening. They will go
overextend. Right.
They will overextend. They will overcorrect their laxity of the previous 10 years, and that's exactly what they did when they went from 0 to 5.
Yeah.
And that's where we are now at. Now they're just making noises that we'll stay put and all that. But these new problems are not helping the cause. I doubt if they're in a position to raise things, because we know the problem that average mortgage rates are causing in the US. We know the problems of high interest rate, but we know the strain it's putting on bank balance sheets for that matter in the US. I don't think the Fed can raise. So it's literally between a rock and a hard place. I'm glad I'm not the Fed governor, to be honest with you.
Right. So the probability of raising rates from here, you would say, is zero? And
nothing is zero. I would think it's next to zero.
Next to zero. And the possibility of a rate cut by June, is it possible to hazard a probability to that?
They say a week is a long time in politics. I think it's a long time in markets. You're talking now 6 months or 8 months.
But the markets are looking ahead, right? I mean, you say this more often than I would ask you, that markets are already looking 6 months, 1 year ahead.
I can probably hazard a guess that you might get a beginnings of a rate cut in June, because that's still 8 months out, and a lot of water can flow under the bridge. But you don't know about this war in Gaza. I mean, the Ukraine war is probably now more discounted, but the Gaza war is becoming seriously problematic. Of course, that also means that there can be a ceasefire. So, it's more violent. It's more in your face. The pictures are much more damning than the pictures from Russia, Ukraine. So, yeah, there is a case to be made for a ceasefire. We'll see. June, hey, it's long enough out for us to be optimistic and say there can be the beginnings of a rate cut.
Sure. Elections next year, do you think the markets will start, what is the market assuming right now? what could be the potential risks? Because you look at various reports, people are talking about 20 to 40% risk to markets in case the current administration doesn't come back with the strength that they need to form the government. Would you agree with that? What are the other possibilities?
We say this, Mahalakshmi, I am bullish on India. Baat khatam. It doesn't matter which party runs this country. I can tell you this country is destined for greatness. And that's my simple one line view. I'm not interested in getting into the politics of who will do better or worse. I think we have been blessed as a country to have had great leaders right from independence up until now. And it will happen 50 years from now, long after. Hey, I don't think I'll be dead by then. But let's assume that I'm around. We'll still have great leaders out there. And India has got a growth path which is so clear in my mind. Given our low rates of per capita GDP, we need to be there at 10,000. The energy of the people, the entrepreneurship of the people, the creativity of Indians. I mean, what can stop this country? I mean, there can be temporary speed bumps. The BJP doesn't come, Congress comes, or some other. I mean, maybe we get a 10% down day. I don't think that's going to happen, by the way. But I mean, I'm not saying which party comes. I'm saying the markets won't fall because markets have seen what other parties have delivered. So let's not waste time looking at which party comes to power. I'm bullish on India.
But in the short term, markets are always like that, right? They will sort of react to these things because there is an assumption that all this growth and everything that we are factoring in terms of public spending, fiscal prudence, whatever it is, there is a certain premium that India has got because of this narrative. Isn't that correct?
Good premium. I remember 2007 in Davos, India was the toast of Davos. It was India's decade and India's century. 15 years on, it's exactly the same story. It's just that we have recency bias. We think that India suddenly become the toast of the world. No. I'm sorry. Let me correct you. Back when the BRICS story was formed, and within 5 years of the BRICS story, people realized that only India and China are the viable, sort of part of the BRICS formation. And now China, because of its own problems, has fallen off, and India is the only man standing, or let's say person standing. India is destined for greatness, irrespective of which party rules it.
So you're saying, irrespective of election outcomes, the market's not going to react to that?
Even if it reacts, I think that's going to be the buying opportunity of the decade, like it was in 2004.
Fair enough. And what is your prognosis for the entire year? By next Diwali, what are your predictions? Where do you see the markets? What do you see as outperformers? Where are you putting your money?
I think I'll be richer next Diwali than I am.
That you are every year, irrespective of where the market goes.
No, I pray that, like me, there will be millions of medium, small, big investors talking the same. Mutual funds, like I said, have a problem of the large caps. I'm not so sure large caps are going to deliver substantial, let's say, inflation-beating returns. But hey, for millions of investors, large caps are probably not the right place. I think it's going to be the small caps. As long as you've chosen 15, 20, 30 good stocks, assume 10, 20% will go bad. The rest will make you substantial money from now up until next Diwali. I'm very certain of that.
Sure. So 25,000 by next year, will you bet on it? On the Nifty?
In percentage terms, I'll bet on small caps delivering that. Nifty maybe half of that.
Okay. So this is not a question, Shankar, but please sing us a song describing last year and a song which captures your sentiment towards next year.
My God, why do you keep putting me in this very difficult situation?
You are the Mohammad Rafi of the Lal Street, so.
Okay, so now that you mentioned Mohammad Rafi, okay. I'll sing one Mohammad Rafi for the last year. Okay. Tere mere sapne ab ek rang hai. हो जहां भी ले जाए राह हम संग है हो तेरे मेरे सपने अब एक रंग है हो जहां भी ले जाए राहें, हम संग हैं। तेरे दुख अब मेरे, मेरे सुख अब तेरे, तेरे ये दो नैना, चांद और सूरज मेरे, ओ मेरे जीवन साथी, तेरे मेरे सपने अब एक रंग है। हो जहां भी ले जाए राहें, हम संग हैं। ओके,
Awesome.
दिस इज
One for next year.
किशोर कुमार। पल पल दिल के पास तुम रहती हो, जीवन मीठी प्यास ये कहती हो, पल पल दिल के पास तुम रहती हो। कल तुझको देखा था मैंने अपने आंगन में, जैसे कह रही थी तुम मुझे बांध लो बंधन में। ये कैसा रिश्ता है, ये कैसे सपने हैं, बेगाने होकर भी क्यों लगते अपने हैं। मैं सोच में रहता हूँ, डर डर के कहता हूँ, पल पल दिल के पास तुम रहती हो। Okay, done.
Wonderful, wonderful. Thank you so much, Shankar. Such a pleasure talking to you and, of course, listening to you even more. Thank you so much. Wish you a very, very happy Diwali.
Likewise to you, to your family, and all the viewers of Money Control. Have a fantastic Diwali and a fantastic next year, guys.
Thank you so
Bye.
much. Bye.